It's different, I think, in the way that it combines the macro description of the financial crisis with a very detailed account of one individual institution. So I've got a lot of respect for the macroeconomists that explain the financial crisis, people like Paul Krugman, like John Taylor, or even the Turner report by Lord Turner here in the UK. But I think the trouble is, if you follow them and if you believe that the root cause of the crisis are either artificially low central bank rates or current account imbalances between different countries, then there isn't such a big role for bankers. Bankers suddenly become a sideshow, or they might even become victims of the global crisis, which is why this theory is just enthusiastically accepted by the banking community. My favorite example for that is that with the press statement, when Northern Rock sent out their press statement informing the public that they had to get a bailout by the Bank of England, they described themselves as victims of a global financial crisis. They literally talked about themselves as victims, and to me that doesn't sound quite right. So I think you have to look in more detail about what banks did, and what I try to do is to connect the micro perspective of banking with the macro perspective of those economists by what I describe as the 7 deadly sins of imprudent banking. And the other thing is that the bulk of the book is really a fairly detailed description of how Handelsbanken is run. So a bank that has proven that it's fairly resilient, not just in this crisis, but also in the Swedish crisis in the 1990s. So basically giving a fairly detailed account of how they run their business in a way that might not be so obvious when you look from the outside. Might be a lot more helpful when we think about banking after the credit crunch and how we want bankers to run their companies and how we want bank regulators to look at them.